The spreadsheet is complete. The audit is filed. The AI did it overnight. Accountants are the financial backbone of every business, organization, and economy. They prepare financial statements, manage tax compliance, audit company records, and advise on financial strategy. It is one of the world's oldest and most trusted professions. But today, AI-powered accounting platforms, automated audit tools, and machine learning tax engines are entering every practice and finance department. So, is the accountant facing an AI revolution? And what does this mean for the finance professional working with numbers today? Let us start with what AI is already doing in the world of accounting and finance. Automated bookkeeping platforms, powered by artificial intelligence, are now capable of categorizing transactions, reconciling bank statements, and generating management accounts with near-zero human input. Tools like Xero, QuickBooks AI, and Sage Intacct use machine learning to process thousands of transactions automatically, flagging anomalies and producing reports in real time. AI-driven tax compliance software, including HMRC's Making Tax digital infrastructure and platforms like TaxJar and Avalara, automates VAT calculations, corporate tax filings, and payroll tax submissions. What once required hours of skilled accountant time is now completed in minutes by automated systems. Audit automation is perhaps the most significant AI disruption in the profession. Platforms like MindBridge ARI Auditor and PwC's Halo system can analyze entire datasets every transaction, not just a sample, identifying anomalies, fraud patterns, and compliance risks at a scale no human auditor could match. The Big Four accounting firms are already deploying AI to transform their audit processes. AI-powered expense management systems like Concur and Expensify automatically process receipts, enforce policy compliance, and submit reports without human intervention. And AI forecasting tools are generating cash flow projections, budget variance analyses, and financial models that previously required senior accountant expertise. But here is where the accountant remains absolutely irreplaceable. Strategic financial advisory, guiding businesses through complex transactions, restructuring, mergers and acquisitions, and capital raising, requires commercial judgment, relationship intelligence, and contextual understanding that no AI can replicate. The accountant who advises a founder on their exit strategy or guides a CFO through a debt restructuring is performing irreplaceable human work. Tax planning and optimization, as distinct from compliance, requires creative interpretation of complex legislation, understanding of client circumstances, and proactive advisory skill. While AI can file a tax return, only a skilled tax advisor can structure a business to minimize liability legally and efficiently. Forensic accounting and fraud investigation demand investigative judgment, legal understanding, and the ability to reconstruct complex financial narratives from incomplete or manipulated records, work that remains deeply human. Accountants who develop expertise in AI-augmented audit, data analytics, financial technology advisory, and strategic CFO services will be among the most valuable professionals in business. Those who combine deep technical accounting knowledge with the ability to interpret AI outputs, advise on complex financial strategy, and build trusted client relationships will thrive in a market that values human judgment more as automation handles the routine. So, will accountants be obsolete by 2030? The reality is this: routine bookkeeping, standard tax filing, basic management accounts, and repetitive compliance work will be largely automated. Research by Oxford Economics suggests that up to 40% of accounting tasks are susceptible to automation within the next decade. However, the demand for strategic financial leadership, CFOs, tax advisors, forensic accountants, and financial planners is growing. McKinsey projects that demand for financial advisors and strategic finance professionals will increase by 15% by 2030, even as routine accounting roles decline. The Institute of Chartered Accountants in England and Wales warns that accountants who fail to adapt to AI-augmented practice risk displacement. But those who embrace data analytics, AI tool mastery, and strategic advisory will be more valuable than ever. Those most at risk are accountants performing purely routine bookkeeping, basic tax compliance, and repetitive payroll processing. Those in advisory, forensic, strategic, and specialist tax roles are in strong demand. By 2030, the accounting practice will look different. The AI will have processed the transactions, filed the returns, and flagged the anomalies. But the trusted advisor will still be the one who reads the commercial landscape, builds the client relationship, and provides the strategic insight that drives the business forward. AI is not replacing the accountant. It is handing them the most powerful practice management tool they have ever had. The future of accounting is not the algorithm or the automated platform. It is the professional who knows how to use both.